Hi and welcome back to another trading session. And yeah, today's session again is another of the series where I will be trading our evaluation account. We'll be showing you the entire process from starting with evaluation, moving into the simulated funded account, and then trading the live account. And I will approach it as you should approach it when it comes to risk. I'm not trying to skip through the account as fast as possible. Even though I'm confident with what I'm doing, I could trade with larger risk and try to reach the target as quickly as possible, which is what a lot of traders do in general, which is not good, because with this account you have a really tight drawdown available and also a trailing drawdown. So you need to trade with appropriate size. And yeah, my strategy, as I always repeat here, I'm going to mainly look at breakouts, potential breaks to the upside, breaks to the downside, and right now I'm just trading based off of key levels, taking a really simple approach. But as we go deeper and deeper into it, I will show you how to look at order at different indicators, taking volume into account, looking at order flow, taking the footprint chart to make that so that you have more and more confirmation, right? You can just trade purely out of what you see on the chart with key levels and just looking at base volume. But as you progress, you want to have a higher win rate and you want to know on which trades you can capitalize on. And yeah, that's why we need to make sure that we have everything clearly defined and take the right approach and make sure that we have enough data to take good decisions, when it comes to executing trades and not just pure randomness. So first of all, now I need to use the drop down here because I have this chart all zoomed in. I wanted to make sure that you can see all of the numbers better, because with the previous videos, the resolution was a little bit higher of my, like the resolution of the screen where I'm recording my chart. And that made the data on the chart a little bit too hard to read. So now that's better. So on the left here, we have the 22-second range chart. And now let's first go into the daily to make sure that we get a better idea of what is happening. I mean, we had that big drop here. Yesterday, we had a pretty large gap, which we actually closed by end of day. So let's look at the 4-hourly right here. As you can see, we had that huge gap here between 600 and 300 point gap, which we closed yesterday. Then today, we moved back into 200 after the open, into 200, bouncing off now back to 600, which is our current highest point of resistance here in that local area on the 4-hourly. So now we go into the 1-hourly to then identify the trend, which is what we should do if we're trading, and if we're looking if we're trading with the approach and I'm trading right now, you need to get a better idea. So let's look at basically here in an uptrend, right, on the higher time frame. That is clear. Generally, if we look at the daily, the bigger picture the past weeks, we have also been in an uptrend. So taking longs is what I will be focusing on. Obviously, I take trades to both sides, but I always try to go with the trend. Now, looking at the 15-minute, nothing interesting here. Just looking at the 500, which is the key level we broke. But now, getting a pullback right here. Then I need to click on the drop down now, but whatever. Let's now take the 5-minute. And the 5-minute is the main chart that we will be watching once we are in an entry. We will be charting on the 22 range chart for the breakouts that I will be taking, because they are mainly like quick scalps, 10 to 20, 30, 40 points. Nothing, not holding trades too long here, because I take quick trading sessions here. I don't have a lot of time, but I want to get into teaching you and showing you what you will be going through at our firm, trading on our desk. And yeah, that's basically why I share the things here. So let's now make sure that we get the key levels on the charts. Obviously, we have the high right here. High day is 600. Now we have the 20 as the high right here. Locally. Now we moved down into right here, 82. So now here already two trade ideas: potential break to the upside at 20 or break to the downside of 80. So what I would look out for here, if we would be looking for a break of 20, and I'm not taking any other indicators like the footprint chart, where I can get a better idea of how buyers and sellers are interacting, looking at the bid and ask. I purely need to use the data that I have here, which is just looking at price structure and looking at volume. So now already I'm really interested in taking, let me put 5 contracts right here. So if we happen to get a break of 20, I would take a long into 30, 40. So let's actually move it to, we have it at 522 is fine. And then put the take profit here at 540. Take profit level 1 would be 30. Now let's just wait. We could have like a pullback into the lows here, breaking 80 to the downside, which would be the second trade idea actually. And what I do, I always wait for my trades to play out. I try not to take the position too early, so that I have a higher likelihood of the trade playing out in my favor. So let's see how price holds here above 500. Now looking at it, we'll get a new 5-minute candle within the next 10 seconds. I missed out on this move here, on this entire move. I missed out because I had some technical issues, so I actually couldn't directly go and trade the first 10 minutes of the open. But that's not a problem. We're not missing out on anything here because we are focused on the process and not on making a lot of profits right now. So I don't like what I'm seeing here, so I'm actually moving my entry, basically closing it. I didn't really like it. I mean, we're slowly grinding up, volume is decreasing, not really interested in this move, at least at the moment. So I see two scenarios here: that we will get a small pullback below 500 and might then see our break of 20, or a break of 80 into 50 or even lower. Actually, let's look at the low a day today. Where is that? I don't have it on this chart, but I have it here. So let's zoom out. 240 is the low of the day. So with this candle, there's an increase in volume. So pulling into 480 right here. Because we are here, we had this strong move here with these two 5-minute candles. I'm not directly going into taking the short here, but I'm definitely interested in taking a break at 20. I thought I read an increase in volume, but it's okay. There's a lot of volume now on this candle. Broke through 500, which would have been the indicator. Let's say I would have gone long here. Break of 500 would have been the indicator for me to actually invalidate my long idea. And here would have been a really nice entry now for my short. But as I said, I'm on the long side right now. So what I'm looking for is a break of 20. So yeah, in one of the last sessions, I got a comment which I want to talk about, was asking why I move my take profit away from the entry. Why I moved my take profit away from the entry whilst I trade my stop closer to my entry. And it's basically because I don't want the limit order to get filled by accident. Let's say there's a fast... No, I need to focus again, not explain, just see what price is doing, because I really like what I'm seeing here. We can definitely see at least a small increase in volume, but it's not strong enough for me now to be taking any longs here. Because obviously I'm also interested in potentially entering a little bit earlier than the actual break of 20 to be positioned a little bit better. So there's definitely an increase in volume. Okay, I would enter here already, then remove my, oops, what is that? No, that is what I wanted to remove. Put my stop right here at 499, so right around 500, and move my take profit to 38, so not right at the 40s, and then just wait. So now we have a 20-point stop loss. That is the average stop loss that I have. Like risking 20 to 25 points on a trade. Sometimes if there's a really good opportunity, I might even go all the way up to 30 points. And yeah. So let's see. Good, got filled. It was a perfect breakout trade. So now let me explain to you what I was just explaining, but the trade building up actually interrupted that. So what I was just explaining was that I move my stop loss, my take profit. I either close it or move it away from my entry as my trade is playing out. Let me make a hypothetical trade here to give you a better idea. So let's say 640 is my entry, right? So let's say I'm in one contract long here. So let me see. Just need to check something real quick. Need to check something real quick. So good. So now let's get back to the trade that I wanted to talk about. Basically, when I am in my position, let's say I'm long 640, right? And I have my stop here and I have my take profit right here. Or let's say I have a 1-to-1. And then as my trade is playing out, let's say we break, we move a little bit lower, then break 640 again to the upside, and I'm not that confident anymore with my position, then I might trail my stop, or generally trail my stop if just to, let's say that as my trade is playing out, I have made it a rule for this trade that if we break 640 again, after now being around, let's say around the 50s, that I will close out on my position. Because I will call my trade as invalidated. And the thing is, as I then trail my stop, I will either widen, right, or completely remove this limit order. The reason is that it might be the case that price moves so quickly that my stop loss gets filled and then it just sweeps up, right? Just flushes up, and then I get filled at the 58 as well. So now all of a sudden I'm short, even though I wanted this limit order as my take profit. And that is the reason why, as I trail my stop loss, I either also further move my take profit further away, or I completely remove it. The other thing is, which definitely helps, is if you are really confident with your position, right? And let's say you just want to close out 5 and just want to let the other 5 contracts run. Let's say you have 10 contracts in total. Then, for moving the take profit further away is also just good to increase, basically the gains that you can make on that specific trade. So these are the two reasons why I basically move my take profit away further from where I initially had it. So now let's look at what happened here with the trade. Basically, my idea was to trade the break of 20 if we get a strong enough move to the upside. And yeah, that is what I basically did, right? And we first moved back into the low right here, 480, managed to stay above it. Then volume increased, and that is is the key indicator I'm looking for, right? I'm looking at the price on the chart, looking at how the different levels, how price is reacting to the different levels, but then I also look at volume to get a better idea. So here volume is increasing, and as we get closer to 20, volume significantly increase, and with the break, even more. And that was the confirmation for me to actually enter into this position earlier. The increase in volume as we break 500, first 505, then 510, and then volume increase. So I take the position, even though I initially had my entry at 522, right? So this way, where did I enter? I entered at 590.75. So I had around 2 points more, right? And with 5 micro contracts, 2 points more is a lot, right? So let me do the calculation real quick. So it's $25 more on this trade just by having entered earlier. And that is what you can do if you have enough confidence with your trade, right? Not enough confidence by having enough confirmation. And so really happy with how this trade worked out. Was a perfect example of the type of breakouts I trade. And as you can see, after the break into 40 where I took profit, we moved right back to 510. So got a pullback, right? And so what we could have done here, what I usually never do is I don't stay in this trade and just hold it for minutes. I could have just waited to get the pullback here, then the break of 40 again into 60. So I would have gotten 20 points more. But what I rather do is I close out here for profit, see that we move below 20 again, get a fail here with the first, move into 20, back to 10, next push into 20, again, increase in volume, break of 20, and that is where I would have entered the second long. And then instead of getting 20 more points on top by grinding through this move here, I get the 20 points plus another 20 points. So I get 40 points more. And that is what I prefer to do, entering multiple times instead of instead of holding long onto a position like that. All right, so that was it for today. Just one trade, keeping it really short, keeping it really simple. I mean, I generally like the price today, what price is doing, but I don't feel that I want to take another trade here on the day. It was a really good trade, closing the day out here. So let's actually pull up the performance center so we can see. We took one trade. Let me make that in full screen. And yeah, we took one trade, $187 in profits. Was just a 48-second trade, so under a minute. Wasn't a long trade that we were in, but worked out pretty well. So we had a 20-point risk on that trade. We took 20 points, right? Or how much? How much was that? Right, we entered at 19 and closed out at around 38. So yeah, 20 points. 19 to 20 points. And let's go into this again. Then, yeah, I mean, there's nothing special to look at because we only took one trade. So it's saying 10 contracts right here because I had 5 micros, right? So 5 micro contracts, quantity of 5, opening 5, closing 5. So the total is 10. Paid a commission of $5.20. That's decent. It's good. And the thing is, a lot of traders they take a lot of trades. So they take 30, 40, 50. I see some traders taking 200 or 300 trades on a day, and then they end up the day with $600 in profits, right? The problem is, you can do that if that is profitable for you, but the really big problem, talking about fees, is that the fees really add up. The more trades that you take, the more positions you take, the more orders you execute, the more fees you will pay. And if you're making $600, but you're paying $300 in fees, then that is not good. Then it's way, way better to just make $180 on a day. You don't have the stress to having so many different trades, but you're only paying $5.20 in fees. That is way better, right? So, yeah. So here I'm just paying like 2.5%, around 2.5% of my profit and fees, and not 50%, which would be the case if you're just like scalping like crazy. And, I know everyone has different approaches, but especially if you are in the beginning right now, you're just starting out, or you're still really struggling, you need to make sure that you know what your edge is. You need to have a strategy that actually works, that is profitable, and that you can repeat. And, it doesn't mean that that your trade idea needs to work out with the first order that you place, right? In the last session, or 2 sessions before, I don't exactly remember, I had a trade idea which I needed 3 attempts to work out, right? Was profitable in the end, I guess. I don't quite remember, but I think so. But yeah, but I wasn't taking 30, 40, 50 trades, right? It was just like 3 to 4 trades in the end of the day. Because that also works. Let's say I take the first attempt let's say I would have taken the first attempt here of the break right here. And it failed, as you can see. We moved lower into the 90s again. So my idea would have been invalidated with the break of 500. So with the first move against me, I would have had a 20-point loss. Then now, moving up again, taking this trade, and then I would be break even because I make 20 points. Then I would break even, right? And then I wait, see that this attempt really failed, but we're holding above 500 and getting another break of 20, and then I take the position, right? So if I would have entered here, I would have had just multiple attempts for this trade idea. But what not to do is to completely invalidate your trade idea just because it didn't work out in the first time, and then trying to do something completely different. You had a reason why you had that trade idea, right? We're trending to the upside on a day. I'm looking for breaks to the upside. That was my idea. I had the level 520 right here, which was a key level for me which I just needed to be broken. But you also obviously need to make sure that you have, the levels defined at which point you will call your trade idea as invalidated. So for me, that would have been this right here. If we break around 85, 80 to 80, then I would have called the trade idea as invalidated short term, meaning long, like going long. So if we would have moved below 80 and held below 80, I would have looked for shorts. That is basically how I go about it. When just trading off of volume and just the price here on the chart, not taking any other key indicators into account. But yeah, that was what we will do in the future soon, looking at other indicators to even get a better picture of everything, so that exactly you know why you shouldn't have taken the first attempt, because you can read most of it, right? Like, one thing, like really, really simple thing right here is, as you can see here, let me zoom in. As if we're just looking at volume here without taking any like a footprint chart, which we will look at in the future. So we get the break right here. We get the break of 515 with this candle, But look at volume, almost no volume. And then when we got the pullback, the first pullback here on this candle, volume significantly increases. So you can see buyers are really struggling to move the price higher. Here too, we get a pullback and then grinding to buy it back up. With this break here, especially with volume, we should have seen a straight, strong candle up to get a confirmed break of the 20s right here. But you can see it was just struggling to get the price higher. And then we get a pullback. A lot of volume on this candle. So here on this break of 15, we could have entered a short just for a few points right into the 500s right here. And then here again, a lot of volume increasing on the move to the downside. And then holding above 500, but no volume. You can see there's no volume. We're moving up again, but volume isn't increasing. Moving down again, volume is increasing. And this will give you the idea that, shorts might be in control right here. So let's look at same thing here, right? Like here, different thing, not the same thing. As you can see, a lot of volume. I mean, that's the trade we took, but I wanted to go into, no, I don't have another example basically here. Like we could look at, that is basically how you could have read it just off of volume, and basically the structure of price right here, to either take a short or at least not take your long. I wouldn't have taken a short here, way too risky. And as you see, we're just grinding sideways between 500 and 515. So not a good short to take at all. Wouldn't have loved to be in this position. Also strong counter trend trade, which you shouldn't do in the first place. No shorts here. Shorts, if we break 80 and we hold above 80, and we can see volume increasing to the downside. But once we, take order flow or a footprint into our package of indicators, then we will have it a lot easier. But first, let's take the simple approach, because you need to understand the basics. Thank you for watching. Was a good session. Just took one trade, $180 in profit. That's all you need. And if you have a couple of these days, you can easily get to the profit target. And if you're trading an instant funding account with our firm, Perdia Capital as an example, you just need to reach $3,000 in profit. And taking small, decent days like this with just little risk, it doesn't take too long. You don't need a month, because every now and then you will also have exceptional day. Like one day we had here where we made $400 in just this day, right? And that is how trading goes. there will also be a day where you're making $1,000 just trading with the same risk that you're trading with. If everything is working out for you and you get a good runner that you just let run, right? But yeah, so if you're interested in joining our firm, click on the links below. You can also join my trading desk directly once you're a live trader, so you will get one-on-one coaching sessions with me, so that we will grow your account into tens of thousands of dollars and build a good environment together where we can perform as traders. It's just the beginning here, but it's getting really exciting. More and more traders joining, and thanks for watching.